Alrighty. All right, guys, thanks for joining. We did have to push this back a little bit today just because of our brother H3's or Alvin's what's it called?
Schedule.
Classic. Sorry, his schedule. So excuse us for that. But this is good information and things that I think would actually be beneficial to brothers in the space. We're going to be talking about a little bit about finance and crypto markets and some of the investment strategies that I'm Classic is actually going through right now and actually employing into the market itself. With that being said, we are not financial advisors. We are not financial planners. This is not a financial advice. These are more like suggestions and things that we're actually doing, or not suggestions, but these are things that we're actually doing in the market. And we're just telling brothers to look out for it and see how you can actually capitalize on this market. After that, I'll pass it on to our brother. I'm Classic. He's somebody that's been in the space for quite a bit of time. Usually a guy that hangs out in the comment section, stays in the background and stuff like that. But I've definitely been honored to know him and talk about some of the things, some of the financial comings and goings of the crypto market and stuff like that. And we struck up a conversation, and I was just like, bro, we got to stream this. So definitely he's graced us with his presence here and giving us a little bit of time on a Saturday. I'm Classic. On to you, bro.
Yeah, I got a few names. Alvin Hollinger. I am Classic. I'm known as I am Classic in certain circles. And I'm here today, yes, to really discuss how I developed my own personal strategy around the cryptocurrency market. And also things that I noticed about other people as well that's in this market too, especially people who are not high net worth people yet, but they are trying to find opportunity and they're trying to develop sustainability using the cryptocurrency market, which is possible, but there's certain details that I think sometimes we are missing in doing that. So a little bit background, me, I learned about Bitcoin in, I would say, 2013. I learned it from a YouTuber by the name of DaVinci J15. DaVinci J15 was a Black Canadian computer programmer. But what was unique about DaVinci was he also studied the financial markets. Yeah, what's up, Don? What's up? But he also studied the financial markets as well. So he was around to see the 2008 crash and everything like that. His channel originally started off as talking mostly about precious metals like silver and gold in order to hedge against the crashing market. But over time, he started to speak more about this thing called Bitcoin and how it was going to be big. And so, of course, when he started talking about that in the silver community, because it wasn't just him, it was like a set of guys who used to talk about silver constantly back then. People start choosing their sides, they're like, oh, okay, well, we know that, silver is the real money, silver is the hard asset. Why are we going to pick on this computer thing? Must be a government project, things like that. Anyway, so that was 2013. I didn't make any moves into the crypto market until about 2016.
I do want to interject there because that's a big thing in the silver bug community. So silver, precious metals, the silver bugs, gold bugs, they're really against a lot of this internet fiat funny money type stuff because it's like, listen, if you can't hold it, if you can't hold it, or if you can fold it, it's not real money type stuff. And I was definitely a part of that. And now I'm not a part of that only because, and we can get into this too, maybe later on, but I'm not a part of that market now because of the high premiums for silver, which I think are justified in terms of price, but I'm not paying $8 to $9 over spot. I'm just not doing it.
Yeah, we'll get into exactly how I would fit that. I haven't completely given up on precious metals. I've just reallocated it in my mind. But we'll retouch on that subject a little bit later through the narrative because I'm building the story for y'all right now. So okay, late 2016. Okay, I finally get into it. I want to say maybe early 2016, mid 2016. After hearing Da Vinci talk about the Bitcoin so much, I started researching it, and then I finally found some of the early channels that kind of broke down what blockchain was and what Bitcoin was and how to obtain it. That was also around the time the first set of Coinbase was starting to get a little bit more bigger.
And
That was the hardest part.
there,
Yeah,
and
yeah. And also in the big city, because I live here in Houston, Texas, they started to finally get some Bitcoin ATMs established.
mm-hmm.
So the first time I purchased Bitcoin was at a ATM, and this ATM was in the middle of downtown, and it was in a convention center. So you had to go to the convention center, go to like the second or third floor, and it was just sitting there by itself, by its lonesome. And I ended up purchasing it, and I get of course, the QR code, in which you could use a wallet to scan it, which was a big jump for me because I had never had a wallet app on my phone.
Mm-hmm.
And I guess the first biggest lesson is you really don't know how to navigate crypto unless you play around with the infrastructure or with the software, with the apps, things like that.
Right.
It's, we hear about all the massive gains that people can get all of a sudden with crypto, but we don't understand that there's a whole skill set you got to develop in order to navigate that market.
Mm-hmm. Yeah,
and
like
you gotta
hold where to hold your coins, how long to hold your coins in an exchange, how to actually, in a sense, give up control and custody of your coins, and when to do it and how to do it, and then also how to transact in that market too, in terms of dealing with fees or anything else that goes along with it.
all of that, and it's something that
And
someone can't just sit down and tell you in one conversation. It's an ongoing learning.
Yeah, you have to live it. You have to live that life. You have to be in the groups. You have to have conversations with like-minded people. You have to have those long chats exploring things about it.
Yeah, and then over time you get used to navigating. You'll know that if you hear about a certain coin, how to research it real quick, and also the pathway of obtaining it. Because sometimes obtaining a specific coin may take 5 or 6 steps.
Yeah,
it's not just as simple as going to an exchange and buying it. But for that skill set that you learn how to navigate that, you get to get in faster than the average person. And therefore, you get the chance to have better gains than the average person.
Yeah, in some cases, having money in certain and strategic spots, in different exchanges. Like, okay, listen, don't leave your money in exchange unless and you have those times where you have a little bit of money in different exchanges. I had that to where I had money in an exchange, and I totally forgot about it, didn't log into it since 2018, and I came up on 11 grand that was just sitting there because I had money in different places.
And well, that's another key point too. Sometimes the people who actually do much better in this market are the people who buy something for a little while, and for whatever reason in their life they forget about it, and then they remember it years later. They do better than some of the people who watch this market every day and try to swap out or try to move gains from one coin to another.
Yeah, there's a study on that, and it was I think his name is J.L. Collins, and he talks about, like, passive investing, the easy way to do it, and his biggest thing is just put your money in a well diversified index fund and keep on doing that until you want to take it out, and that's it. That's all he has to say. And one of the things he brought up was a study talking about some of the richest people on some of these exchanges or brokerages were the people that experienced the best gains were people that were either dead didn't know that an account was left for them by a dead relative, or forgot about the account,
Mhm.
which is
Mhm.
crazy.
And the reason why is because dead people don't have emotions, or people who forget about the market have their emotions tied somewhere else. And that's ultimately your greatest um challenge in a market like this, a fast money market like this, is your emotions.
Right, and it was crazy because even now I've done streams in the past, and I don't do a lot of those. I need to do like another portfolio update stream, but currently in this market, and it'll be good to do it just so people can see how like my resolve with it. But in this market currently, uh, I had my portfolio was it was 100K. Now it's 78, and I'm not scared at all. It's just like buy more. Every chance I get, buy more. Like that's how I
Mhm.
look at it.
Yeah, there's a whole strategy. You have which will cover the details of my strategy um soon. But so we're at 2016, 2017, right? In my storyline. That's when I started buying crypto. That's when Coinbase was up, and that's when I started buying basically the coins that were talked about a lot on YouTube. At that time, it was like Bitcoin, Ethereum, Litecoin, and Ethereum Classic
Hmm.
mostly, and of course Ripple XRP, but XRP wasn't on Coinbase at that time. So I'm buying stuff on Coinbase. I set up maybe my first wallet. My first wallet was called a Mycelium wallet. Mycelium wallet, I think even to this day, is still only focused on Bitcoin.
Hmm.
So I learned how to move Bitcoin between Coinbase and Mycelium.
Hmm.
Cutting and pasting or pointing your phone towards another device so that you can capture the QR code.
Hmm.
So that's where my first knowledge base came. Of course, listening to YouTube videos. Also I learned how to sign in to various exchanges. So one was called Crypterium.
Yeah,
Crypterium is gone now.
yeah.
Another one was called Cryptopia. Another one was called
I was on Cryptopia.
KuCoin.
Yeah.
Um, and you learn about these by listening to videos and also by going to basically the two top crypto reference sites. One is called coinmarketcap.com
Hmm.
and the other one is called coingecko.com.
Yeah.
And these pages are very important assets because not only do they give you the price, they give you all kind of analytical data on that coin or what's going on with it in the market. Um,
Which is a big part of your strategy, correct?
yep, big part.
Hmm.
Um, so I'm learning all this stuff. It's 2016. There is a bull run at the time going on. So of course you get not addicted, but you get used to checking your wallets like every hour or something like that, right? Because it feels good to see your money running up crazy.
And
So
it was every minute. It was a roller coaster that wasn't going down. And if it went down like this, like that was like how it felt during that time.
right.
Well, I got in a little bit later. I got in the 27 area. So go ahead.
hmm So you're doing that, and of course, 2017 is the first peak of that cycle. There has been other peak cycles. Like there was a peak cycle in 2013. Um, and of course, Bitcoin was probably like only maybe not even a few $100s. It was probably sub $100. But for the people who got in on Bitcoin, that when it was only like 20 cents or something, that's life changing money.
Yeah, was that.
Um, but I got in around the late 2016, early 2017 cycle. So I also subsequently got to ride the um, 2018 to 2019 bear market.
Yeah.
And that's where a lot of lessons were learned there as well. Um,
Yeah. Not just lessons, but it's like being forged in the heat of battle. Things like that. Like
yeah,
that's how it felt.
one of the I was because it's coming up to my mind right now is one of the biggest lessons that I learned with that bear cycle was to not treat your crypto portfolio, crypto holdings as savings. What do
Mm,
I mean by that?
okay.
What I mean by that is, let's say you each month have a spare $500.
Hmm.
Okay, I wouldn't recommend that you put all $500 into crypto. Oh,
No,
crazy, Don.
you ain't shit. Get out of here, bro.
Yes, I rode the crypto carousel.
Yeah.
But um, what I'm saying is, you already have a predetermined amount.
Hmm.
If you either have a certain amount of money left at the end of the month, or you come across some money for that month, I would say usually generally split it about 50-50. You know, unless you're already
If you have that extra $500 and you can be without it, still maybe not think like still keep some on the sideline and in your wallet, or sorry, in your fiat, keep it fiat, and then another and the other half fiat, half invested.
yeah, because there's nothing more heartbreaking than having to come across either emergency or situation and having to sell your crypto, and not just sell it, but sell it while it's going down.
Oof. Yeah, I've done that way too much, and you're totally right, and I'm still guilty of this. I'm not gonna lie. So when you said that, I was like, whoa, I feel personally attacked. But I still go through this, or I still do this because, uh, I talked to a friend about this just the other day, and I said, listen, man, one of the biggest things and one of the biggest and best things you can do in terms of investing into the crypto market and or any market whatsoever, especially crypto, is have savings. Like have that $1,000, $2,000, not credit card, not credit, cash.
Right, right,
Like
right.
have that money so when shit really hits the fan and like you can't make your mortgage payment, no problem. I got something else. Hold on, a couple of shout outs. So invest in crypto with your lunch money, not your rent money. BGS Edmore, totally you're right. And like
There you go.
we're definitely talking about the lunch money, but he's even saying going further into it, take that lunch money, that $5, and just invest 250 and keep 250 for yourself.
And also, Don brings up a great point too.
Hmm.
Um, that was one of the sins or mistakes that I made while the market was hot. I was like, my phone bill is not due until about 2 weeks.
Ah,
So let me go ahead
uh-huh.
and put this money into the market. And basically, I made a bet with myself as to whether I was going to basically be able to pay the phone bill and still have a little extra money left over. And because you're not psychic, because you can't time markets,
Mhm.
I recommend not to do that either.
I do want to
Nope.
shout out what's it called, Line of MGTOW. Appreciate you, brother. Love your content. Love the work that you do and the message that you put out to brothers. So I appreciate you joining this. And he's got over 30. Listen, man. Hey, little do they know there's some brothers out here that's just silent with it and just got money sitting. And the thing is, that's a lot of money. It's a life changing amount of money. But for brothers that are actually watching, this type of content, we're focused on a longer term outlook and a larger nest egg that is going to go into our retirement to make sure that we can actually fund our retirement. Especially if you're a MGTOW, you're looking at the possibility of dying alone, getting a dog and dying alone yourself, and you're okay with that because to some extent that's what you want. This is this is titled MGTOW retirement, so I do have to work that in because this is the mindset that we have to actually this is the reality that we have to that we're facing, and then this is the mindset that we have to have in terms of making sure that we don't have to depend on anyone, and we're not burdening anyone, because when you put yourself as a burden to someone else, sometimes you just get, you get let go, you get, pushed aside, you're the lower priority. So MGTOW retirement's all about making sure that you have yourself straight. And last thing is, like, shout out to brothers like a brother, an elder in the space, Vince and MGTOW, that has passed. And he talked about things like this. He talked about crypto. He talked about the cycles. He talked about making sure you're having money saved up and things like that. And that's very important. We line of MGTOW, we will get into a quick Q&A if I can stop talking here. But
we covered that a little bit earlier, but we're gonna circle back to precious metals.
Yeah, we're gonna get a little bit deeper into it. If you can't stay, because I want to get through his. He has like a presentation, or he has a bit to show us here. But questions will be answered later on in the stream. For anybody else that does have questions, there will be a Q&A section to this.
All right. 30 minutes. Bear market. Okay. So I don't know what kind of I think I had more good experiences than bad experiences in the crypto market. That's what kept me watching and looking, even when you hit the bear market or the lag of the market. But I did, and to this day I'm still active in the market. I just look back on all my experiences and just tightened up a strategy around it, bit by bit. So how can you use a conservative amount of money to access the crypto market, while at the same time reducing your losses, but putting yourself in position for maximum gains? The biggest answer to that is really time and patience. But the more you learn about the market, you learn that the time factor is not that bad at all. Usually, a cycle with
when you say not that bad, you mean the amount of time you have to wait to see things come to fruition?
Correct. So when I say time, I'm not talking about 10 or 15 years. What I'm talking about more is 2 to 4 years. So I base that 2 to 4 years on the Bitcoin cycle. Bitcoin has had, it's usually a time window between 2 and 4 years, in which it basically it multiplies itself at least by an order of 10. And I can prove that to you guys. You can put the screen share on, Grizzly.
All right. Cool. I'm going to take us down, and it'll be just your screen.
All right. Let's go to.
And also, if you can, increase the font on your screen, or on your browser. And that just helps because of my struggle stream in terms of.
No problem. So let's go to Bitcoin, right?
And we're on CoinGecko.com if you want to follow this yourselves at home.
All right. So with Bitcoin, okay, this is a 24-hour thing. It's just, how do you make sense of this? The only people that can kind of make sense of something like this are the people who are doing leverage day trading, which is extremely dangerous. What I usually do is I'll hit the max button. All right. Max button it starts to kind of make a little bit more sense, right? Because you're starting all the way back here in 2013, and there's a whole bunch of no activity. Then that's your first, anybody who got in around here is feeling super happy right here, and they may have sold either too much or didn't sell anything. Then so we got all the way up here with 2018. That's the cycle that I rode right there. Mm-hmm. And then, so it lags for a little bit. You start getting a little bit more life, maybe mid 2019, lags a little bit. And now, of course, this happened. Mm-hmm. But this chart looks a little bit better. But the one that I always like is when you switch this from linear to logarithmic. Mm-hmm. So you see, and I like logarithmic because the y-axis changes in orders of 10. So people were happy to go from $100 Bitcoin to 1,000 between 2013 2014. People were even more ecstatic when they went from 1,000 to 10,000 roughly 4 years later per Bitcoin. Mm-hmm. And now what's happening is it looks like the cycle is slowing down a little bit, but we were at 2018, so it's taken about 6 years, but at the same time we're approaching that 100,000 mark. Another thing to note about this is that you can literally draw a straight line under this log.
Yeah.
Which means that the growth potential for Bitcoin is sizably higher than the lag potential.
Now, I do want to point out something. Friedman's Journal, thank you for joining, brother. Dang, that looks like gold in the late 70s and early 80s.
Yeah. I mean, the dollars are going to...
Go ahead. Sorry.
Yeah, the dollars are going to chase something.
Mm-hmm.
You know, it's going to change. It's going to chase some type of asset. So sometimes it's just the time that you have in the market attached to something that can soak up dollar value.
Right. Yeah. Whether it be precious metals. Yeah. Whether it be precious metals, real estate, like some market is going to appreciate in value. The thing is, you want to make sure that you're in that market and then also in that market for enough time to reap the benefits, the rewards.
There you go. But anyway, I look at Bitcoin because Bitcoin is still the dominant influence of the crypto market. Whenever Bitcoin goes up, it pulls so much coin activity below it up with it. Whenever Bitcoin goes down, it pulls a lot of coin activity below it. Now, the only coin right now that can challenge Bitcoin in dominance is Ethereum.
Yes, that's my shit. Let's go.
Yeah. So we may see in a few years or so what's called the flippening. What the flippening means is that the market cap and maybe even the value of Ethereum may flip Bitcoin.
In terms of dominance, in terms of taking over.
Right, in terms of taking over. So while Bitcoin is still like the dominant influencer of the crypto market, Ethereum is gaining on them. Ethereum is gaining on them.
Faber, I know you have your question here. I'm going to put it up. We do not, Alvin or I'm Classic, there's no reason to answer this at the moment. Guys, we will be answering questions later on. So this will be addressed, Faber. So excuse us for like ignoring it for now, but it will be addressed later. So excuse me.
Yeah, indeed. Yeah,
he did have a statement. There's a lot more involvement in crypto from institutions than there used to be. So maybe the bear run won't last as long. Yeah, and that's true. And some people would also say things like the bear run is orchestrated. I will say, look at the pattern. If you have some type of pattern recognition about you and you can realize patterns over a long period of time, every time at the end of the year and the beginning of the year, coming out of, January, February, when, books are closing and companies are doing the IRS filings and all types of other stuff, you will always see where, and then of course, holiday season and stuff like that, you will always see that, and the line of MGTOW, the stream will be up. I will not take this down. This is definitely great information. But you will always see that the market will lag or will drain out. And this happens every single year. And with that being said, I'm a dumbass, and every single year I have little money to put into it. And I will totally admit that. I am flawed, but trust me, guys, this happens like every year. And I'm not saying it's a guarantee, but I've seen it way too much. We could even talk about the 2017 bloodbath at the end of that year in 2018.
Which is another reason why, circling back to what we were talking about earlier, that $500 that we were talking about earlier. This is the reason why you keep why you keep half of that on the side. It's not just for emergencies, it's also for opportunities. Now, whether you want to separate your opportunity money from your emergency money, that's on you. But at least you have some type of cash on the side to make a move.
Yeah, and this is where I say something like, luck. The formula for luck is opportunity plus preparation equals luck, and the preparation is just having money sitting on the side.
That's it. That's it. Um, that's basically it. Just the discipline to have that. I don't care how proficient you are financially. You always need to have a space for just non-active or dead capital. Yes, um, uh, inflation is going to eat at it, but at the same time, I think it's just prudence in order to stack up at least 6 to 9 months of your monthly expenses, and that doesn't mean that you have to continue to save perpetually. But if you have, oh, what was that?
No, sorry, I was just bringing up the stream so I can copy and paste these questions from the chat. So that was just the stream playing back by accident.
Oh, okay, okay, yeah. But you always strive to put yourself in a place where you have a cash reserve. I mean, money that you don't think about until you absolutely have to think about it. That's a fundamental. But anyway, what I also wanted to show y'all, since I had the CoinGecko site up, is currently there's about, according to CoinGecko, about 12,463 different coins, right? So the market's saturated with all these different projects. Let me take a look at CoinMarketCap.com. Both CoinGecko and CoinMarketCap, they're like Coke and Pepsi. They're different brands of the same thing, which is a coin analytics website. Let's see. Oh wow. CoinMarketCap has 16,800 different projects. It's going to be important that I talk about how many coins there are so that I could give you the logic of my strategy that I developed for my personal speculating. All right, so that's that. I believe in the growth of the market because I still believe in the growth of the Bitcoin, which is the world, basically the world indicator of the health of the crypto market.
Well, first off, brother, I just want to say one thing. I appreciate your level of preparation that you have this document. Can you can you share it? Increase it, but can you share this document? Can we give this to other brothers that are watching?
Yeah.
Okay, yeah, definitely give me the shared link and then put it in the back chat, and then actually if you want, put it in the main chat.
Can I tell you what? Let me do this. Let me send it to you as a PDF, maybe.
No, just share it because then we can get the information out there faster.
Okay.
And then you can always what's it called?
There we go.
Make updates and then get it out to people.
Okay.
Yeah, get that link.
Let me see how I can send this link to you because I'm working off of 2 different devices.
That you can email me the link though. That is
okay. There we go. Okay, let me do that.
And then also there's the back chat on StreamYard itself.
Oh, okay.
And then there's
the StreamYard.
Yeah,
where's
on
the
right hand side there's private chat.
Boom. There you go.
All right, perfect. Guys, I'm gonna get this to you right now because brothers just sharing some crazy shit, right? We'll see how deep he goes with it and everything, but this could help a lot of brothers out there. This is not financial advice by any means, but it is something that he's doing, and it's something that maybe you can use to model, whatever you do in the market after.
Yeah, just think through the logic of it. That's all. I'm not saying it's perfected logic, but I've spent a lot of time thinking about it. Like whenever I hit a snag in my experience with the crypto, I say, how can I avoid that? You know, and
Hey,
that's where. Uh-huh.
sorry, can you go back to share real quick before you go on? And we got to open that link up.
Okay.
So share, and then where it says change, where it's under get link, there's a link at the bottom of that. Click that.
Uh-huh.
Change to anyone with
Change.
link. Yeah, click on that. And then
Right
copy
there.
that link.
Okay.
Right.
Boom.
Cool. And then
Okay.
choose done. Just to make
All
sure
right.
it's saved.
Try
and
that.
then put that in the back chat. There we go. Perfect. And
All right.
All right, cool. Continue on. Sorry to interrupt. That was rude.
Okay. That's all you need?
Yeah, that should be it.
All right. So where are we now? Okay, bear market. So now we are here where I am today. And I guess I can go line by line for my strategy and and tell you just kind of the logic of it. All right. So here's my crypto strategy. Number one, dollar cost average into my big six. My big six are Bitcoin, Ethereum, Litecoin, BNB, Tron, and Hex. The reason why these are my big six, all of these are either foundational coins that have been around or they're layer one coins, meaning like the other coins in some way, in some fashion, interact with these coins, especially like Ethereum and Tron, because those have smart contracts on them. BNB has a smart contract, but there's actually two versions of BNB. There's the BNB that's I guess on exchanges, and then Binance created what's called a smart chain for their decentralized network, and that their decentralized network, which is still kind of centralized, is their way of competing with Ethereum, basically.
Yeah, another coin that is like Binance and has recently come out because they have their on exchange coin and their coin that can go on other exchanges. So it's external. Another one is crypto.com, which I am also invested in.
Yeah, Crow.
Yeah, CRO. Crow.
Uh-huh.
Yeah.
So those are my foundational coins. Whenever I get to a point I've made a sizable gain in some other coins, I realize my gains back into one of my big six. While at the same time, yes, I still dollar cost average to grow the big six. Because you can always take value even from the big six or from some new money that comes into your life through your job or whatever, and either use those to swap into the other coins, or buy the other coins and sit until they make their gains from over time. So that's my logic behind that. The next one is establish small bags in alts. Alts really are any coin except for Bitcoin, but the definition has kind of been expanded to pretty much anything outside of Bitcoin and Ethereum. That alt means alternative coins. These are different. Mm-hmm.
I do want to stop you. I want to go back to number one a little bit. So the line that says buy up to $50 worth of available leverage hedge tokens around each. Now, do you mean take that $50 and split it across the big six? $50 per big six? What are your thoughts on that?
Okay. Well, I'm glad. I should have read a little bit further in my description. There are such things in the crypto market called leverage and hedge tokens. Mm-hmm. The most well-known set of those tokens is on FTX. Okay. There are other exchanges that have them now, but FTX created Ethereum-based tokens that hedge or mimic the hedging or the leveraging of the price movement of Bitcoin, Ethereum, Litecoin, BNB, TRX, and they keep on expanding that. These things are beautiful because if you do have a sudden market crash or a sudden market run, some of these tokens are designed to leverage the gain or short the loss.
Now, you mentioned FTX as in Frank or STX as in Sam, and then what is the URL for that?
FTX. There's two sites for FTX. There's an American version of FTX. Of course, it's watered down because of securities laws.
Mm-hmm.
And then there's a foreign version where you can get full access.
Now, can you in your document, can you put parentheses at the end of that line and put the URL so other brothers can actually look at it? And I'm sorry, I'm just like I'm like nitpicking on this stuff, man. But this is the type of stuff where people don't talk about it, or it's glossed over, you know. So, so I definitely want to make sure that this is
FTX is a good Coinbase alternative too.
Okay, so I'll put this in the chat myself. FTX US, guys. So I'll put that in the chat now. All right, go ahead. Continue on.
All right. So number 2, establish small bags and alts in the top 500 per market cap, and some occasional alts that are mentioned but not in the top 500. Focus mostly on buying dips 30% and below within 7 days of activity. Purchase a few meme coins, no more than $50 position. As you can see, I already for any coin. I don't care if the coin is Manosphere coin, all right, and it's like eight decimals sub penny. Whatever coin or token that I put my money in that's not one of these big six, I already have a fixed amount set in my mind. The more that you can predetermine the amounts that you're going to put into any coin, the less emotional impulse is going to push you to just all of a sudden get into a coin because you're hearing about it everywhere. And then, spoiler alert, by the time you're hearing about a coin everywhere, like from Forbes to Yahoo Finance to whatever, it's already kind of made its major move.
Right.
You know.
So now, with that being said, what are some ways, and you don't have to go too deep into this because I'm trying not to talk too much, but this is too fucking good. But what are some ways that you can be ahead of it? Where are some of the places that you want to be? What are the channels that you want to be subscribed to?
Okay. As for channels, the one that I would recommend right now, because not only do I have a fundamental way I look at these coins, I look at it from a technical perspective. So you need to find someone who is a very, very smart and accomplished technical trader that could look at charts. The main person that I would recommend for that, his name is Mitch Ray on YouTube. And he does a technical chart analysis every day to people who send him tickers to look at. Hold on. I'll put this in the chat.
Another brother within the space that I always talk about is Crypto with Lionel. I don't believe he has a channel anymore, but he is a friend of this channel for sure. And then, of course, Dollar Will, who is a mentor to both Crypto with Lionel and myself. So Dollar Will is a person that is a technical trader, but Dollar Will has a Patreon, and he also has a Saturday stream. I was trying to invite him on this one, but he has a Saturday stream. So he's been on that, or he is on that right now. And he's another person you can actually subscribe to him and talk to him more, you know, as long as you're a member of his Patreon.
So I just had an incident or a situation yesterday where I bought a coin based upon what Mitch was describing in the charts. And I'm not that technical chart savvy, but the more that I listen to him describe videos and charts, the quicker I'm able to pick up on what he's saying. what the case that he's making. Mitch is not my only guy. I have some friends internally that we discuss these things pretty much daily. And they have some charting experience as well. There's also Telegram groups of technical traders that look and talk about specific coins and things like that. If you're in this crypto world, you're paying attention in this crypto world like daily, you're gonna constantly hear another coin, this coin, that coin, this coin, that coin. Some of the coins will pop up more consistently than others. So what do you do? What do you do when you hear about a coin and you hear and you learn the ticker and all that stuff? Your first step is to go, or my first step is usually go to CoinGecko. We could talk about the one that I did yesterday. They were talking about this coin called UNO, UNO. Oh, okay. Here's another thing too. There's different mentalities of speculators or investors out here. I'm more of kind of the raw numbers technical guy, so I don't have to know a lot about the project, but I'll show you what I do, what's important to me. Some people do need to know about the project. They need to know about the future potential of the project, how it's going to be integrated by individuals and institutions. I personally believe that we're still too early in the market to see who's going to be the winners. This is like this is mid to late 90s .com era. So you had all these different .coms, right? And all of the .coms said, uh-oh. Hello?
Yeah, I can hear you. I'm still here.
Oh, okay.
I'm trying to keep quiet.
Okay. All of the .coms, everybody came out and said, okay, well, our .com does this, our .com does that. And a lot of venture capital chased these .coms because everybody wants to be in on the ground floor of something that's going to be life-changing, right? Mm-hmm. Of course, the market crashed, and there was only a few survivors. And we're here now today, depending upon Google and Apple and Facebook. Well, Facebook's a little bit later. Facebook's like early 2000s, but really Google and Apple. So what I'm saying is we don't know who.
And even Amazon, I believe. Yeah.
Right. And Amazon, right? Like stuff that's become like infrastructure in our life, period.
Yeah, because before Amazon, you would think Barnes and Nobles, you know?
There you go. Or Borders. Something like that.
Borders. Mm-hmm. Oh, Borders books.
Mm-hmm.
Bro.
So we're not at this stage in the crypto market where we figure out what changed and what coins are going to be the absolute life-changing, dominant, multi-generational assets. You know, Bitcoin gets kind of close to that. Ethereum gets close to that, but everybody else, right now, everybody's speculating on hope and potential, which is a good thing. It's a good thing that we have a highly volatile and highly speculative market. Why? Because if you handle such a market wisely, you can extract value out of it while it's maturing.
That's very important. And you know, like another thing, going back to looking at a coin, the validity and the viability really of a coin. That's important to me because that determines how long I'm going to hold this coin. That determines what I'm going to do when this coin starts to tank. If I look at a SHIB or a Shiba Inu versus a CRO, SHIB's getting fucking thrown overboard every time, and I'm getting more, and I'm saving CRO. Making sure CRO is safe. Or pro.
Yeah, that's one strategy. That's definitely a strategy as well. That the more you look at this market and the more you look at the behaviors of people, there's basically two extreme type of strategies. Mm-hmm. The first strategy is the higher money, faster return strategy. These are people who usually have a higher amount of money and they're happy with scalping 30 to 50% gains off of whatever moves are made.
Mm-hmm.
That's what most people do, actually. I think, in my opinion, I don't have any hard numbers. I just look at it from the that they'll take a large lump of, or they'll take a sizable lump of money. They'll put it in the market. If that coin goes up 30%, they'll take all of that money out and try to put it into a different coin. They'll try to hop. They'll try to hop between buying low and selling high. In short time frames, we're talking about maybe weeks or months. I understand that one. My strategy is more of a slower, conservative strategy. I'm not happy, or I'm not aroused until the gain in my position that I put in that coin hits at least 250%. In other words, but the way that it does that is that you have to give the market time to do it.
Right, and if we look in terms of X or multiple multipliers, or something.
Yeah, 250%, 2.5x.
No, isn't that 3.5x? Or
no. What the way that you convert a percentage into a X factor, you just cut 2 zeros off of the whole number.
Oh, okay. All right, because I'm thinking 100 is double, 200 should be triple.
Right.
Okay.
There you go. So you're probably right on that. Shoot, you're right.
Yeah, right.
You're right on that. Yeah, you're right on that. My bad.
Okay.
My money math is off.
Hey, listen, man, that's what happens when you make too much, man. The shit doesn't.
Yeah. You're right.
It happens, bro. But that's what I was thinking. But yeah, that's like 3.5x, guys. That's a lot of fucking money, man. And and the thing is, the extraction, and you said it perfectly. Giving, you can extract value from the market as it matures. People are extracting even more than that.
Yep. So how do I compensate? And that's why my strategy has to require multiple coins, because you don't know when any of these coins are going to hit that target, and you don't want to be just sitting with 1, 2, or 3 coins waiting for it to hit that target. You might as well expand your portfolio out using smaller investment amounts, so that you can maybe, at best, you could create what's called like a water wheel, meaning like when one coin pops, you can realize gains from it, and either put it off to the side or put it into like one of those big 6 or foundational coins and let it sit there. And you just kind of constantly, you just slow, instead of trying to watch all these coins, you're slowly monitoring when these coins make their move, so that you can extract value out of them.
Yeah, I've heard this actually explained or conceptualized or envisioned as a river with tributaries, so branches, but the main river, you always feed back to the main river. It's the main source. So if you're making, if a branch of that river, a tributary, starts to grow in size, that's fine. You can drain it back into the main river, or it'll eventually drain back into the main river, or it's fine on its own, and it can grow on its own, and you don't have to, do anything to take away from it.
Right. And if your foundational coins, such as Bitcoin, over a 2 to 4 year period is 10xing itself, you shouldn't be you shouldn't be anxious that it's not going to recover from some drop during that time. Right. If anything, what the ideal situation would be to take a coin like this and go up 250%, and then while Bitcoin is dropped or something like that, because then you get to basically put those gains into a position that's lower and ride it up.
Right. And then also like a lot of this stuff, I mean, guys, we're a little bit off of the document right now, but the thing is, it all makes sense and it all comes together. So this is all about mindset and developing a mindset and developing your own strategy based off of your own tolerances. Because what we're saying is, at this point, it's like, okay, now you're faced with the choice of, should I invest more into this altcoin that is now growing, or should I skim some off the top and put it back into my main coin, my big six, my big four, what have you, put it back into that main coin that will grow on into my retirement, that will grow on into investing into a new home, it grow on into investing into another business or some other,
there you go.
Going from there. So yeah,
you don't have to keep the money in the crypto market. That's the beautiful part about it. You can use this quote unquote fake digital money to build up capital for real assets.
Yeah, I call it a crypto flip, is what I like to call it. A part of my crypto flip is actually taking some of these cryptocurrency gains one day and putting it into assets such as AT&T. AT&T is not a mover and shaker, but it is something that is great to get the dividends off of. And then that pays you, and that goes into something like a FIRE movement strategy, a financial independence, retire early type strategy. So it's like things like that. And that's what I like to, and this is like kind of a part of Alvin's crypto strategy here that he's talking about. Like all this could be encompassed. Like he has 4 points on his document. The link is in the chat, but these are just baseline. These are guidelines, if anything, in some cases.
Yeah. I actually invite people to have conversations with, because it may help me tailor an even more efficient strategy. But here's my story around this, because we were talking about how do you find hidden gems? How do you look at stuff? I'll show you guys this. And this is why I like CoinGecko. This is why I like CoinMarketCap, right? There's so much analytics on these pages. It's ridiculous. So here's page 1, right? At the bottom, there's a page counter. Each page has 100 coins on it, right? 1 to 100, 2 to 100, that. Okay? So how do you find something that what I call is on sale, that's at least 30% below within the last 7 days?
Hey, guys, before you go on, guys, Alvin, as you can see on Classic, Alvin H, he has his Cash App. It is in the banner below. Support the gentleman. Please, guys. Anything that you give him to help out. Go ahead. Sorry.
Okay, so what I did, I clicked it once, right? This is going to show you basically the top gainers in the top 100 lately. If you click it again, you'll see the top losers. So we have this Olympus that's 26.5. Usually I'll do this maybe once or twice a week, and something gets really interesting when you get to like page 3 or page 4. But let's look at page 2 real quick. Again, this is 101 to 199 and 200. Hit that 7-day button, right? Something gained 80% in the last 7 days. That's cool. But let's look at this. Here we go. Here's one that's 30%. But it's the old Safe Moon. And this is where your knowledge of the market comes into play. What happened was Safe Moon had a conversion. So I guess what you can learn from this is that if you see an old behind it, there's something that's happened to that coin, but there's still residual activity. As you can see, there's only $68 of value on there. So you do not want to mess with something that says old. If you go to their page, it'll usually put like a banner at the top that says what's happened to the coin. So I wouldn't recommend that. What they did was they created they put Safe Moon on a different chain and you had to convert it. But the main point of the matter is you can use this page to find out what's made a significant dip, like in the last week. Because that kind of dip, if it makes a 30+ dip in 7 days, that means it spiked down. Mm-hmm. And so in my logic, what are the odds of a coin that spiked down significantly, spiking down even harder for like the next week or the next month? Mm-hmm. There's certain things, especially if you listen to technical traders, they'll talk about buying and selling momentum. And buying and selling momentum is very telling about the activity around the coin. And usually you want to get into a coin whenever the selling momentum is slowing down, meaning that it's called seller exhaustion. So when things start dropping 30 or 40 or 50% in a like a 7-day period or shorter, then eventually it's going to exhaust its momentum. And that momentum becomes what's called support. And usually around support is when it's a good time for you to actually get into that coin, because the way that it reacted in an extreme direction downward, it now sets itself to operate in an extreme position upward. And so that's why I like to hang around the top 500 coins, because you're not in the top 500 coins accidentally out of 12,463 coins. That means you have some semblance of use case that people can actually believe in, or B, you got so much venture capital money backed behind you that market makers are literally making you a legitimate coin in the market. That's my line of reasoning about that.
Now, and as a caveat, this isn't always true, and this is where your research comes in. This is where you have to look deeper into the coin. You have to watch more videos, maybe read the white paper, also listen to talks about that coin from the coin makers, developers, people that are there. Do your research on the coin itself. Usually, anytime these coins come out, there is somebody that does a video breakdown. I forgot the guy's name. Something Bellina.
There's a lot of them. There's a lot of them, bro.
Yeah, and there's a lot of them from the yesteryear and from yesteryears too. I like Altcoin Buzz. I like Crypto Daily. Crypto Daily talks about the news, but he doesn't talk about new coins. But some of these guys are saying like, hey, how much Solana, right? Ethereum, how much Bitcoin does it need? How much do you need to buy right now to retire? And then also what country can you retire in, and how much is it going to take? The people go that deep into it, but there's always information out there, and there's some more obscure channels that you can go to get the information as well.
This is actually a good thing, because I'm reviewing this as I'm on the stream with you guys, and what I'm noticing is that there's not a lot of coins that have dipped below 30%. So what this tells me is that we're probably near a local bottom in the market. Whenever you can't find coins that haven't dipped significantly, that means that it's entering into a sideways pattern in the market, meaning like people have really, really slowed down on selling. So now they're trying to figure out, should they go down a little bit more, or should they let that momentum build so that they can go back up? Let's look at this one, Rome. So Rome is ranked number 402 out of 12,000. Coin that I have never heard of, but it's down 37.8%. There's some type of activity around this. So I click on it. So the first thing that I learned is, okay, right here, Moon River. Moon River is its own chain. So you will have to interact with the Moon River ecosystem in order to access this coin. So what I come down to look at right here.
And what layer would this coin be then, with that being said?
I'm not too steeped into the Moon River ecosystem, but the way that I process and figure out how to get into it is let's see.
Well, the question is, so is Moon River a layer 1 coin and Rome a layer 2 because it goes on top of Moon
There you
River?
go. Yeah. It's like such as Ethereum has tokens. These Moon River is a layer 1, so it has its own primary like Moon River chain or a coin, but then it also has a token.
Right.
Yeah.
And then that's one of those things where you would probably be like, okay, well, because my thought is, and this is why I asked a question, because my thought is Moon River then is maybe a coin I want to invest in as a layer 1 coin that is a chain that supports other chains.
Right. Layer 1s are like your railroad, right?
Yeah.
So the box cars on top of the railroad or the locomotive on top of the railroad are the tokens. So that's how that is the difference.
That is a way of looking at it for sure.
There's a lot of competition for basically who's going to be a more efficient Ethereum. Because right now the issue, or one of the issues that's probably slowing the crypto market down, is the fees that's needed to move tokens and ecosystems around on Ethereum. The people who are eating off of Ethereum right now are the people who are mining Ethereum.
Now, with that being said, I do want you to finish this portion up because I want to get back to your document and then have that 30 minutes. I know you said you only have a couple minutes with us today, and I don't respect your time.
I got you.
So
I was just showing you how. Right. I'm doing this part to show you how I do the due diligence of finding attractive coins to get into. The first step is to find something that's significantly down. The second step is to go to its page and look which ecosystem it rides on. So I have an idea how to buy it. The third thing is to come down to this part of the page. As you can see, this coin is 85% down from its all-time high. So the question in my mind is, for a top 500 coin, what are the odds that I can lose like a sizable amount of my money getting in at something that's like already 0.5% down? So that's the way that I look at it.
Yeah, because at that point, this is finding a coin, and then now that we've looked at it, it's 85% down. Now we have to start doing the research so that then we can make the judgment call.
Yeah, if you want to get deeper into the fundamentals of it, that's perfectly fine. That's perfectly fine. If you want that added layer of assurance about activity, I wouldn't speak against that at all. So let's go back. Where are we? We already did number 2. Number 3, set alerts around every coin with tracking apps. For me, I hodl. Excuse me.
I didn't say anything. Go ahead. Sorry.
Okay, hodl for 250% to 750%. In any coin, take 20% off of those levels if I choose to. Put that amount into one of the big 6. So basically, you'll find yourself working with multiple wallets, multiple exchanges, and also because these coins are not always held easily on different wallets. You're going to need different wallets. Sometimes you can get away with holding multiple coins on what's called a multi-wallet, like Trust or Clever or Atomic. And then sometimes these chains have their own wallets, and you have to download them from the App Store and hold their assets in that wallet, and also interact with their decentralized exchanges, which is that's a different level.
Now,
but anyway,
one thing I do want to put in is managing all these different coins, managing all these different wallets. It is a full-time job. It can become a full-time job. So some people, like myself, I even will limit myself to coins that are only on exchanges like Coinbase, where I have higher liquidity. I can move in and out of coins. My money's are my funding options are already set up and things like that. That helps me get in and out of the market, and that's where I find comfort. But because of that, I am missing out on 10x gains, where like a SHIB or Shiba Inu SHIB, it wasn't on Coinbase for a long period of time.
Right, and by the time it reaches Coinbase, the move's already been made. You have to wait for it to reset itself.
Exactly.
Yep. But so there's wallets, but there's also what's called tracking apps. The best tracking apps that I like, I actually put it in I didn't put them in the document. Dang it.
This will be an answer to Friedman Journal's question. His question is there a site that you can put your positions into and have a portfolio? And when he says put your positions into, it's just a tracking app. In some cases, if it is a site where you actually have your full valuation for all of your coins and things like that. I personally have a spreadsheet that I use to do all of this myself, and I could probably show that a little bit later on.
You can use spreadsheet, but you can also do, like, if you know the primary chain that these coins are on, you can go to your wallet, copy your public address, and put it into the block explorer, and it can show you. Like for instance, for Ethereum, you have Etherscan. So you could go to Etherscan and put your public wallet address here, and it'll show you how much Ethereum you have and also how many tokens associated with Ethereum that you have. That's the long way. There's apps that they've developed in the App Store right now where you can put your public, not your private address, but your public wallet address into the wallet app, and it will generate off of the information from the block explorer so that it can show you what's going on. Most of your multi-wallets, like Trust Wallet and Atomic and Clever, have already a dollar valuated ledger for the coins that you have on those wallets.
I'm going to take over the screen share while you're talking, and then I'll show people kind of what I do real quick.
Okay.
But keep going.
Okay. So that is, yes, they can be tracked. The easiest thing that you can do is play around with the apps on your phone, your Android or your Apple. All you do is go to your app store and put in crypto tracking app. And what these apps will do, so that you're not having to constantly watch your holdings, is you can set alerts in them. In some of these apps, you can set the alert by simply saying, remind me or alert me when this price is changed, like for me, 250%. And it'll give you a push notification of when it hits that target point. Or if you have a certain,
Also, this functionality, guys, is in some of your exchange apps, such as Coinbase, Binance US, and any one of those apps where you can actually have it let you know or notify you when a coin that you like or are watching has hit a certain point for you or something like that.
Right. The only thing I would say to that is that for the most, like the mainstream ones, like Coinbase and all that stuff, they tell you for the most part what, like if there's like an 8 to 10% gain or a fast gain in a 24-hour period, it'll notify you. In other words, the alerts are not as customizable in the big apps, but yes, they do have alerts.
So just to show a little bit about it, and I'll give you the screen share back. But This is a page within my, or a sheet within my overall spreadsheet that I use to track all my assets. If we could, as we can see here, I do it every month. The first of every month, I update this. You can see where I was at $65,000 in just crypto alone. Now I'm down to $47,000, and this is up to date. This is actually uses something called crypto tools. Excuse me. This uses something called crypto tools, and with crypto tools, it actually goes out to this is a script that that you actually have to put uh, into Google Sheets, and then it'll actually expose a list of functions and formulas that you can use. So in this case, mine is Gecko Price, and with
Yeah,
Gecko
it's
Price,
it's pulling it's probably pulling APIs off of CoinGecko.
exactly, that's exactly where
Mm-hmm.
it's coming from. So
Mm-hmm.
it's pulling, it's querying the CoinGecko API to get these prices. Now these prices are different, but it's a negligible difference between the valuation that I have in Coinbase, which is my exchange of choice, and CoinGecko, or CoinGecko's price list. And there's a lot of other different tools out there, and maybe I should make a video about this and how to install these things and use them. But you can see that I have a formula, and then I can use this and put it in different cells, get information from other cells. I can actually set the denomination, or what currency I'm using, and then multiply it by things like this section here, which shows all of how much Ethereum that I have, and how much ADA that I have. And also you see that I'm referencing a field like D1. In this case, I'm using that as my symbol. So you pass it a symbol, or a ticker symbol, a currency denomination, and then I forgot. I think this right here. This is where you want to put it. Or I forgot what this part means. I forgot. Oh, this is a checkbox. And that using that checkbox allows you to update this on the fly. Instead of like reloading the page, you can just check that box. And if it's checking it true or not, that's just another feature of this. You don't really need it. And then I multiply that by this value here, which I actually put in manually. So this is how I track that. And then,
You
of course,
create
I
your own
track that
formula.
over a month, or I graph that, and then this is how I look at. Then now I can start looking at my trend and saying, "Whoa, okay, I was really up there, and then now I'm dropping." And then now I'm also looking at, okay, I reached a low point, like you said earlier, that the market may be trading sideways, and I'm actually seeing that in my graph compared to last month.
The sideways trend, especially if it lasts fairly long, maybe like a few weeks or a month or something, it's just an excellent time for you to be looking at opportunity. Let's say worst case scenario, after this sideways market, it plummets again. Well, you're already protected because you didn't put all of your money into that sideways trend. You're progressively adding money. So if it drops to another baseline level, it just means that now you have something cheaper to buy. So it's highly unlikely that this market is just going to perpetually just keep dropping. Meaning, like, the odds of you hitting a Bitcoin down to 20% of its all-time value, or something like that, is extremely low. There's no guarantees. There's just probabilities in this game.
Right. And when you're doing tracking like this and having your own spreadsheet, these things are very important, because then you can start tracking, how much debt you got, credit scores, or anything else. You can see I'm dipping here. I'm dipping for many reasons. I've cashed out the 401k from my old job. It was only a couple $1,000s. I took that, paid off credit cards. Now I have a higher credit score. Now I can take that credit score and I can start going out and getting loans. Right. For instance, like maybe a $10,000 personal loan or a personal line of credit. Taking that $10,000 personal line of credit, especially during this crypto market. And again, this is something I'm doing. This is very risky. I have to put that in there. We are not financial advisors by any means. And a lot of people look at us, and especially me, and call me a fucking dumbass. But I can take that 10 grand and take the risk and say, okay, this market is at a low, right? I'm not sure if it's at its lowest point. This is over a 30-day period or a month time frame, but we could see from this month to this month it's dropped, and now from this month to this month it's actually come back up a little bit. Now when I'm looking at this, I'm like, oh, okay, well, maybe what I could do, because this point right here actually shows current day, even though it'll show for 2/1 for February 1st. I cemented in at February 1st, but this is active. So I'm seeing what happened last month at its low point. Maybe I can take that that money that I've borrowed and then put it in the market, and then hopefully the market, in terms of its return, beats out whatever interest I pay on that money on a monthly basis.
If you have the time to manage the volatility, and you don't need that credit line or money anytime soon, and when I say soon, 6 to 9 months, maybe a decent move.
Right. And the operative word there is maybe. You know, like we don't know what's going on. We don't know that, like, what can happen, so on and so forth. So that's kind of the big thing. And this is my tracking app. And I was building something at one point, but I got to get back on that along with some other things.
Nah, that's pretty decent. The thing is, one of the questions I always ask myself: how do you help people develop a system that may only just, kind of operate off of average competency? Not that they're dumb, it's just that they're not as engaged as you.
Yeah, the level of focus, because even looking at this market, I even sent out a message to a lot of people recently, close friends and such. I said, listen, if you have any money, if you have any extra money, buy Ethereum. And I actually did that myself. So because Ethereum is down to about close to $3,000 a coin, or 3,300 a coin, now I see that as a discount, and it's a good time to really get into it, because Ethereum is part of my long-term plan and thesis, where I'm looking to ride Ethereum into paying off my home or anything else.
Right. and that's why I wouldn't say I'm voraciously buying coins right now, but I would say that I am steadily putting myself in position right now, because we've hit a sideways market. So I feel more comfortable putting money in a sideways market than I do when it's just falling, like cascading. The last, I want to say 2 weeks, it was cascading. But now it's kind of hit a resistance point. So I'm like, okay, this is probably the best time to do that. Okay, so
I'm gonna give you the screen share, okay?
Okay. So number 4 right here is overtime. Overtime is like the highest speculative aspect of my strategy. This is when you start getting into stuff like yield farming, or smart contracts that are from websites, because somebody will design a smart contract that will generate revenue. Honestly, at this point or juncture in my experience, people who don't really have a lot of experience and people who don't have a lot of capital don't really mess with that. You will, if you hang around the crypto world enough, you're going to hear about these different websites that offer either stuff like cloud mining or educational courses that have a residual crypto wallet to it. They'll often be designed as affiliate marketing or multi-level marketing. 9 times out of 10, when you put your money into those platforms, yes, maybe for the first few months or first week or something like that, you'll start getting residuals or paid, quote unquote. But at some point, the smart contract either gets it either gets withdrawn of all the funds in that smart contract and somebody runs off with the money, or the website slows down, or you can't use the payment function in the website. In other words, most of those platforms are scams. There's only one that I've been involved with maybe a year that has performed solidly. And I guess I can put it in the website because I feel comfortable sharing it. Let's see. It's called Decentralized Hedge Fund. I would not recommend that you put bill money. I would not recommend that you put all of your savings. But what I can say is for the time that I've been in it for at least a year, it's performed well. It took $100 that I put into it and grew it to like $400, and it compounds about 8 to 10% a month. So go check out the website. It's something. It's kind of like just a wild card that you can have in your arsenal. You there, Young Grizzly?
Sorry. I muted myself because I was like I was sneezing and coughing over here.
Oh, no problem.
But no, that's great. You said I'm gonna put that link. I got it in the private chat, guys. I'm gonna send it to you right now, guys. Freeman's Journal was asking for it. Decentralized hedge fund. Again, you know, he is not sponsoring this, he's not sponsored by this page or anything. It is something that he uses and he feels fairly confident with it. But that does not. But guys, do your own research on this type of stuff.
There you go.
Not that I don't trust him or anything else like that, but I was in BitConnect. I put $1,000 into that. I got 1 or 2 friends into it. I knew exactly what it was. I knew it was a Ponzi scheme. I was just hoping that I could get out sooner than other people. I did not.
Right. That becomes the game with the
right.
Ponzi. You think you're the smart one by getting in early.
Right. And the thing is, I knew what it was. When I told people about it, I told them what it was. And I was able to get a little bit of money out of that and then, you know, parlay that into other coins and have, you know, since moved on and covered up that loss in a sense or recovered from that loss. But you know, that's a dangerous game that you're playing. So research and look into the validity of these things and making sure seeing if they have, you know, if they're following SEC regulations or anything else like that. You're welcome, Freeman's Journal. Hey, brother, do you want to move on to the question and answer section?
We're running up against that. We're running up against that time wall. If we haven't passed it up a little bit, I still got a solid 20 minutes. Okay, right here on this, and then we can pull down this document. Right here is my app recommendations. The reason why you want to be able to navigate multiple apps and wallets is, in a sense, you're creating an ecosystem around your crypto. And the more intimately knowledgeable you know how to interact with in between all these different apps and functions, the faster you're able to complete transactions. You can cut down something that takes you an hour to do down to 15 minutes with the right knowledge and to develop the right pathways between these. These apps and these wallets, they have advantages and disadvantages. When you put them together, what I found is that you can compensate for their disadvantages with the advantages of the others.
And one example of that is if you're on Robinhood and using the Robinhood app and it shuts you out of trading for certain stocks, for instance, like GameStop, because Robinhood is a pseudo free app. It really isn't. You're paying for it by your information getting sold and also them marking up the price and, you know, reselling things to you at like a couple cents over a little bit of a premium. It's kind of hidden. But bigger companies or bigger brokerages that actually where you have to pay per trade, where you actually have to pay a fee for every trade that you make, they didn't have the same liquidity or issues that Robinhood had, and you were able to still buy into GameStop and sell out of GameStop if you wanted to. Whereas Robinhood, you could only transact in one direction, which I believe was just selling at one point. So that's the purpose of having two different, in a sense, on ramps into the market.
There you go. So I still recommend all these on the list, and I still use them pretty much all of them at least once a week. So my go-to for actually purchasing Bitcoin is Cash App. The reason why is because it's fast. It's extremely fast.
Hint, hint. He's saying, send money to his Cash App. Just putting that out there.
You know what I'm saying? That too, yeah. Yeah, exactly. My Cash App works very well. So you can buy Bitcoin within 2 minutes on Cash App. I think maybe up to $5,000 worth or something. I had to check the limit.
Mm-hmm.
Usually what I do, instead of going to a Coinbase or FTX or something, I'll go to like Atomic. Atomic has a unique mechanism in it called Atomic Swaps, in which you could swap one coin for another. The fees can vary, but it's an automated system. And I'm surprised that a lot of people don't use Atomic Swaps.
And also the concept of Atomic Swaps is something that other chains are trying to solve. Freeman's Journal mentioned Cardano earlier. Cardano is a chain that is trying to do or achieve a level of cross-chain swapping where it is little to no fee whatsoever. So, and that's considered an atomic swap, a one-to-one swap, where there is no fee, there is no loss on either side, and essentially you'll get the same value in the other coin. $5 is $5, no matter what.
Generally, or just a very extremely low, a low fee, like under $1. Generally,
yeah, and it's almost like $5 might turn to $4.99.
Right. I'm putting in the URLs for these wallets.
Go ahead and add them to the document themselves. That way they can actually see it within the document, and they can go back to the document as well.
Oh, okay.
Excuse me for making you do some work on that one, but
no problem.
That would be a better place for it because of people catching the playback.
Yeah, I got you.
So okay. I do want to get to these questions, so I'm going to. Is there anything else? We got 3.
That's it. Just look at the document, and the main thing is to figure out your own logic and your own strategy. A big part of that is knowing your personality type. If you're an aggressive personality type, maybe doing larger sums for quicker returns is best for you. If you have more of a conservative personality type, maybe my system kind of works better for you. Like you have time to wait, you have time to basically steadily, watch the markets, and it's something that you're passionate about. Maybe that will be the best move for you. But I just wanted to share this because Young Grizzly was so gracious enough to ask me on, and hopefully it makes your crypto speculation and investment life better.
Yeah, man. Listen, you're so gracious for even sharing this with us peasants, us plebeians. We are but jesters within your court, sir.
I got you. So let's see. Right now, this year, 2022, is me proofing out my strategy a little bit more to myself. I want to have more success with it, so that I can show people it works in this market. What I would also suggest for you, besides tracking your numbers, find a way to journal your entries and your exits into these coins. Preferably a digital way to do it. One thing that I thought about, which I don't do, the way that I do it is I actually set up a private group on Facebook. And whenever I buy a coin, I will create a specific post for that coin. And whenever I sell, what I do is I can use the search function in that group to find that post where I put that coin, and I can put an entry in the comment section. So what's going to happen in a few years for me, pending, Facebook is still up, I can literally see a log of my activity around the coin, and when I entered and when I exited out of it.
Now that is a great way of doing it because you're leveraging the actual cloud itself in a sense. So I think that is actually that's actually a very special way of using these different platforms. So guys,
Right.
think about it because that it's also something where you can look at it, and it's also in a way where it's not again, like you said, it's not using something like a more advanced spreadsheet like I have. It's using something that everybody uses on a regular basis and something that also has a mobile app if you think about it. So that's a good way.
And if ever you wanted to prove to somebody that you knew that you was what you were talking about, you just invite them to the private group. You got your whole portfolio there. You don't have to put the exact amount of money that you put in. You could just say that you put 100% of your allotted amount designed, set aside for a coin into it. They don't know whether that 100% is $100 or $10,000.
Mm-hmm.
So something definitely something to think about. And we're ready for the question section now.
Awesome. So first question is from line of MGTOW earlier on in the stream. He says, any word on investing in precious metals? We did cover it a little bit. Me personally, precious metals has gone down in level of priority. Now my level of priority in terms of where my money's going first is the crypto market, especially now with the condition of the market. Second is a standard stock market. So my Roth IRA, 401k, and things like that. Some of those things are automatic and it's already taken out of my check, such as my 401k contributions. And then last is precious metals, meaning in this case, no money is currently going to precious metals. I only have about 6 ounces of silver at all, and I'm not getting back into that market because of the high premium, or if you would say the high premium between the market value and how much you would have to buy these things. It just doesn't seem worth it, and my money could be growing somewhere faster.
There you go. I'm a little bit different from Grizzly. Like, I would be the type that buys maybe 1 or 2 coins a month and just kind of steadily pad it. Silver to me is like it's my mattress money. So if you don't want cash in the bank, right? But you want cash at home, but you want to protect yourself from the liability of your cash being destroyed because of some, I don't know, fire or something.
Yeah, flood or fire. Yeah.
Flood, fire. And you don't want your cash easily recognized by guests that you may have around, females that you have around and all that stuff like that. Put it in the silver.
That's definitely a good way of looking at it, because even when I bought this house, half of the down payment for this house was silver. The other half was crypto.
Mm-hmm. And there you go. Me, ideally, I would top out on purchasing silver once I achieve maybe the amount of 3 monster boxes. There's these things called monster boxes that you can buy.
Ounces, ain't it?
Huh?
Is that like 500 ounces?
Yeah. But this is much later after, the crypto windfall comes.
Mm-hmm.
So either a monster box or the equivalent of it. You know what I'm saying? This is like, what is it? It's like 200 to 500 different ounces. The way that
it's 500 1-ounce coins.
Yeah. And of course, nobody wants to function and live life lugging around all this silver. But at the same time, I would say a decent exposure to it over like a projected 20 to 30 year period shouldn't be a bad move for you. it just sits there and collect dust, basically. Unless you're buying collectible metals. I wouldn't In other words, I wouldn't want all my money into pure digital currency or cryptocurrency, nor would I wouldn't want it all in cash. Neither would I want it significantly tied up into hard assets like property and things like that.
Yeah, I mean, it's basic diversification, and it's also like you said earlier. You have to know what your tolerance level is, how you behave in a market, and what markets are best for you, or what strategy is best for you in a certain market.
There you go. But as for just sitting on a bed of silver, waiting for shit to hit the fan, nah, that wouldn't be my style.
Right. I'm gonna take your screen share down, and then we can. We got two more.
Yeah.
We got three more questions. Actually,
Okay.
one of them was already answered. All right.
Yeah, go ahead. Mm-hmm.
So next one is from Faber, Faber. Do you think we'll see the 4-year boom bust cycle we've been seeing? And that was earlier on in the stream, and he was just talking about mainly. I think during that time we were talking about
the cycle.
Yeah, the different cycles. You showing that rhythmic pattern in the Bitcoin cycle or the Bitcoin chart.
Mm-hmm. It looks like the Bitcoin cycle is being stretched out a little bit more. So that's going to be interesting. But at the same time, you got to take into factor Ethereum is gaining on Bitcoin in market dominance. So I think the best way to kind of play it right now is keep your eye just on the two dominant coins until another coin comes up and becomes more dominant. Because what it looks like is the most dominant coin of the market is what's going to drive the interest of the market.
Mm-hmm.
Because the dominant coin is it's an indicator of really fiat currency activity.
Oh, really? So, like, how so? Only because that's what's
the inflation factor. The inflation factor.
Okay.
So, the only other thing that I would say we need to maybe keep an eye on for the next year or two is the issuance or the release of central bank digital currencies. That's uncharted territory. I don't know how the introduction to basically digital fiat that's controlled by our governments is going to affect the activity of the crypto market. I'm leaning towards it's going to still be inflationary and therefore favorable towards crypto, because that's the only way that our governments know how to manage our economy in context of currency, is basically to inflate it. Because anytime they try to slow it down by ratcheting the interest rates up, something gets disrupted too much.
Right. Yeah, and you can really tell how, well, not really tell, but a lot of people are using the cryptocurrency and even silver markets, especially when silver started to really show its true value.
Yeah.
Or precious metals, not even just silver, but precious metals really started to show their true value during, I forgot what year that was. Was that 2020?
Yeah, it was somewhere between 2008 to 2011.
No. It was the recent one that happened during COVID, where the market value, or the value of silver in the market, was being set by people on eBay and all these other different places.
Wall Street silver. Yeah, I get that, right? Because silver kind of peaked to 25, but right. I was in the silver market when it hit like $45, almost $50.
Yeah, and I got in after that when it was, man, I think it was like I was seeing not 12 but $17 silver. Mm-hmm. I have it on my in my spreadsheet. Like, I can actually go that far back in terms of how long I've been in silver. Um, going back, but go ahead. I'm gonna find it.
Yeah, I was so I was so into the silver market at the time. I managed to get uh, a $10,000 credit card from Bank of what is it, Bank of America and Merrill Lynch right before they merged.
Right.
and I didn't spend all the money on silver, but I did get a sizable position in silver. But as
Yeah,
time
that
flew by,
was. Go ahead.
yeah, but as time flew by, that that 50 de-escalated itself back down to 25, 22. And then I got to a point, like even when this crypto market, while silver, I was rooting for silver to get to like $15, you know. So
Yeah, and
yep.
it's crazy because I'm looking at it right now, and looking at my chart or my spreadsheet, but April 2020, I'm looking at no, we'll even go, yeah, April 1st, 2020, I made a buy for silver and the asking price was $13.90.
Mm.
And over spot, I think it was, yeah, 13, yeah,
The
thirteen
spot
dollars and
price is
ninety.
gonna be somewhere between $3 and $5 now, and that's how the coin dealers compensate for their volatility for the volatility.
Okay,
They make
so
the spread bigger.
so
Mm-hmm.
my information and news is off because um I mean I would look I mean now I was still under the impression that spot was still at $8, $9.
Depends on which coins. Like if you're doing what's called generic bullion, meaning like it comes from a mint, but it is 0.999 silver, but it's not a national coin like
Or
a
numismatic.
American Eagle. Then
Oh, okay.
then the premiums are gonna be lower. But if it is a national coin, it's like a 2021 Silver Eagle or Mexican Libertad or a Canadian Maple Leaf, then the premium is gonna be higher.
Yeah. So during that time, I was looking at April 1st. I had a buy at $13.90 an ounce, and my what was my price over spot? I can't find it because I bought 5 ounces at the time, and then I started to see in May of that same year of 2020, I was looking at $17.13 silver. Then June, we're looking at $17.49 silver. By September of 2020, we're looking at $22.12 silver. So we're looking at over the span of 5 months, silver appreciated from $13.90 an ounce, which I was paying, to $22.12 an ounce. And with that, I cashed out. I cashed out 135 ounces worth of silver.
Mm-hmm.
Um, and sold it at $23 an ounce, and I
Oh
did it
yeah,
over the weekend. Huh?
yeah, that's definitely not bad. That's a 80% at least a 70% gain, something like
Yeah,
that.
yeah, and that's from like and I collected that 135 ounces over the years, and I took that, and that was in September 27th. I have it here. And then I used that money to go ahead and put the down payment on my house. And that was like $3,000 worth of silver at the time.
Oh, okay. All right. Well,
Yeah.
I stand a little bit corrected on that. I'm just used to that $50 high. I'm kind of ruined.
Yeah. Yeah. Well, the thing is, the part that you stated even recent, I guess in the recent market, I don't know what the premiums are. So that could be my thing. Okay, let's get through the last two questions, and anti-gravity, I'll get to your latest comment here. Actually, it says anti-gravity 74 says, I heard of people who bought gold at the top and now they have to sit on it like a decade waiting for it to come back up. LOL. And that's so true about precious metals, man. Like when you do that, like when you get in at a high, it takes forever. And which is why I tell people, if you're gonna get into precious metals, that money is not for you. just like Alvin said, that's mattress money. But for me, I like to say that's money for my kids, because I'm never going to see the true value of that in my lifetime because of the manipulation in the silver market.
It's an insurance policy. If you really want gold and silver to do well, you know how much stuff has to become absolutely shitty for that to happen.
Yeah,
it's almost the argument goes, by the time gold and silver becomes something very valuable, you're gonna be thinking more about lead as in bullets.
Well, and that's the truth, because when silver went crazy, the other precious metal that arose was lead, were bullets. You know, it was to the point where you couldn't even buy primers. A lot of guys that do their own loading of firearm or of ammunition, they couldn't even find primers for primers, casings, ARs, the AR lower, just the lower itself, the serialized part of a regular consumer grade AR. That lower, it was, you're damn right, anti-gravity, you should invest in ammo. That was the other precious metal. Getting a 80% lower, or a 80% incomplete lower where you had to drill it out. Having lower, like guys were buying lowers. They would buy lowers like you and I would buy silver, and they would buy, every couple months they would buy a lower and just have it sitting for projects or what have you. Man, when shit started really hitting the fan, those guys could sell those lowers for 2, 3, 4, 5 times whatever the market value was, damn near. Because people were just that crazy. If you were loading your own stuff and you had primers, you had casings, you had actual gunpowder, all that stuff, people were keeping that even closer to the vest. It was crazy.
Yep. There you go.
Go ahead.
I guess it's a part of your diversification plan. And I saw Friedman's journal. We'll see. I have this saying about humans. I think a human as an individual could be extremely intelligent. Humans in a group, not so much.
The herd animals at that point.
Yeah. So you have to understand that this conversation that we're having right now, we're still 20%ers. We're still people ahead of the game, because aside from maybe somebody going to Robinhood and trying to buy a little Shiba Inu or Bitcoin, by the time you get to the next level of crypto, there's still a lot of people that have just no idea, no holding, no whatever. So the government is going to try to come out with its massive marketing campaign and sell people on the idea that they can have their currency just through the wallet app. No need for a credit card payment system and all that stuff. So,
well, another way to explain cryptocurrencies that I told people back in the day was, if you looked at a wallet address, a cryptocurrency wallet address, and a credit card number, and you really kind of compared them, they are the same thing conceptually. But if you look at the technology behind it, that's where the big difference is. But really, if you we've already been using cryptographic currencies or secure currencies, such as using a credit card, using these chips with these credit cards now, so on and so forth. You instead of having a signature that you're doing on a receipt, you're signing it with your private key, things like that. These are, that's the thing that we're really, that's the thing that people have to focus on when they're thinking about cryptocurrencies. We've already been using this. We're already been socialized to use this. Now we just have to say, a lot of people, that are not the 20%ers, they're just waiting for the government to say it's okay to use it. And that's the biggest problem. And that's where we're ahead of it. We're not waiting for that okay, that nod, that acknowledgement, or the permission.
Right. And I also think too, I don't have a way to prove it, but I also think that the development of these cryptocurrencies and blockchain assets, I think it was actually released by maybe a rival set of elites that want to take power from the current elites. but I had no way to prove it.
Yeah, I mean, you can really get into the weeds there with those theories, and it's actually fun. But the thing is, I'm out here just watching it and waiting to see how it all develops, because it's kind of like, is it going according to plan? Like that's one of the things that I even look at too, is like, is it going according to plan? Because a lot of people don't want to trust it, but a lot of people that didn't trust it, now they are trusting it, because guess what? You got these larger hedge funds, you have insurance companies, you have automakers such as Tesla getting into it. Anti-Gravity says, I'm buying ammo for the next election. If Biden wins again, ammo prices will go crazy.
Yeah, kind of like the Obama.
Yeah. I mean, changing of the guard is always some type of like uncertainty and things like that, and people get scared when in actuality, if a president comes in and causes some type of destabilization, it's definitely not because of the president that was elected. So Freeman Journal says, the person is smart, people are stupid. True.
There you go.
That is the push to crack down on Cash App, getting the sheeple on all digital money. Po folk are using too much cash. And, to a point, they definitely are. And they're also, po folk are too, they're too reliant and dependent on even credit. And I will say that I'm a part of this to a certain extent, even though I can, in some cases, like my next check, my first check of the month already paid all my bills. My next check is for whatever else is whatever else. It's all extra. So
yeah, credit's better used as a debit card, meaning like the money that you spend with it, you put it right back ASAP.
Right.
Yep.
All right. Yep. So Freeman Journal had one question. Is there a site that you can put your positions into and have a portfolio? We did go over that, and Freeman did say we answered it. And we satisfied his question there. There are a lot of apps that you can use. Just to go over it again, Alvin was saying that you can just go on your app store and search for crypto portfolio applications. Be wary. It actually asks you for your private key or anything else.
Yeah, no, do not put your private key anywhere. It's safe to put your public key into these apps, because those public keys, the APIs read those public keys and generate values for you. But no, do not put your private key in there. Some of these apps also have their own ask you to sign up for them. I generally don't sign up for them. I just use them for alert functions.
Right. Yeah, yep. And I may do a video also going over what I do with my spreadsheet. It's a little bit more quote unquote robust, but it gives me a little bit more accurate information or a good temperature check on the market.
It's nice. I like the activity graph that feeds off of the information in the spreadsheet. That's pretty dope.
Yeah, and once you have that data and you have it in a format or a place such as a spreadsheet, or even a tool maybe like Power BI, Tableau, or what else is there out there? There's a lot of other applications you can use once you have that data to query it. Once you have that information in some type of data repository, at that point, now you can start taking that data and start running all types of analytics across it, or even visualizations such as graphs, pie charts, and things like that. And that's why it's important to have it. Okay, last and final question, and then we'll be out of here. What about Celsius? This was talking about, platforms where you can actually use when this question was posed. It was during the time we were talking about different applications where we can actually make money off of our crypto. One thing you said was decentralized hedge. But Anti-Gravity 74 said, what about Celsius? Loaning out your Bitcoin and cryptos for crazy high interest rates like 11 to 15%.
Yeah, they have. Well, you can. There's also staking mechanisms in like Atomic. I think Coinbase is now giving interest for holding crypto.
Yeah. Ethereum, you can do it with Ethereum. So you can have Ethereum or Ethereum 2. You could buy Ethereum and then stake it if you're allowed to. You have to sign up for the service. or for the option to do that, stake it, and then you can make money off of it. But with that, it is held and you cannot trade it. They haven't made it to where you can trade in and out of stakeable Ethereum. When they do have that, I expect Ethereum to go down because a lot of people are probably hurting and they need that Ethereum and they might sell it, or it may go up. But I'm really hoping for it to go down. Also, another one is a chain like Algorand, where you can make daily dividends or daily returns on your actual money, and that is actually available daily. So literally, if you could put like $1 million in an Algorand, if your dreams come true,
it can print money for you. It
yeah.
can literally print money for you. But that's the key. Sometimes I have friends that as soon as they, I guess, buy a position into a coin, they just stuff it into these different platforms so that they could accrue rewards or interest off of them. I'm more like, let me hit my first major windfall first, and then take maybe 20% or 10% of that position and put it on the platforms. Anytime you put your money on these platforms, you're giving up a little control.
Yeah.
The reason why they want you, or they're paying you interest for this activity, is because they want liquidity. They want control of liquidity on their platform.
Right, and they're taking that liquidity from you.
Yeah. So it comes down to how much liquidity you want versus how much return you want.
You can look at some of these. You can look at some of these platforms as like, having CDs, if you will, or certificates of deposits. It doesn't look exactly like that, but in some cases, your money can be tied up for long periods of time, such as staking with Ethereum. That is not a determinate amount of time; it's an indeterminate amount of time, and you don't know when that's going to be available. There is no set date currently.
Right. So again, that's why I would rather ride a windfall up first and then start diversifying for returns like that, so that not all of my money is tied into these platforms. Another thing about Celsius is that Celsius, I think, just recently shut down their access to U.S. markets because I had a friend that was trying to withdraw some money off of the Celsius network, or Celsius app, and they weren't able to do it because their IP address was here in the United States. So
yeah, that's another thing with crypto. Knowing how to, as he said, as you said earlier in the stream at the beginning, knowing how to get in and out of these markets, really living the crypto lifestyle, getting into these markets and saying, okay, this is what I have to do, and knowing how to transact and walk within these different paths.
Mm-hmm. With that being said, I think BitPay, BITPAY, which has its own app and debit card, Nexo, NEXO, and Salt Lending are platforms in which you can basically deposit your crypto and earn rewards off of them.
Yeah. Salt Lending is a very big one. And with Salt Lending, is that one that is that the one where Chamath Palihapitiya is in?
I don't know. I haven't heard that, but I know Chamath. Chamath is a bad boy.
Yeah, he's in. I don't know if it might not have been Salt, but Salt is definitely one of those that have been out there and has been so far has kept things a little bit on the clean side from what I've known or what I've heard. All right. So with that being said, guys, thank you so much. I'm Classic Alvin. He's given us more than the time that he said he could. Gave us 30 minutes more. Thank you guys so much. Definitely hit him up on his Cash App, which is Alvin H3. So, or $, Alvin H3, $ Alvin H3. Show him, show him the love and respect that he's actually shown us by actually allowing us to even see his strategy and put it out in a document, and even just consolidate it into 4 steps. That's that's just crazy. And there's a lot more thought into it. But at the same time, it is a good baseline or strategy or guide, if you will, a hitchhiker's guide to the crypto market or
Yeah.
crypto investing to a certain extent.
If there's one thing that I could probably leave you guys with, try to see your crypto less in dollar amounts per se and more in percentages, because percentages can be translated at any amount. 100% gain or a 250% gain or 30% loss is comparing apples to apples. No matter whether you got $100 or $1,000, you're going to have a better frame of reference of the direction you're going using percentages instead of dollars. And again, find a way to journal your activity, so that you can track your direction, your momentum in your holdings.
Yeah, and listen, that's all good advice, man. The thing is, my biggest thing is always mindset. If you actually tailor your mindset and put yourself in a right frame of mind or a comfortable frame of mind when dealing in these markets, you could lose, in my case, 20, 30 thousand dollars in the span of a month and look at it like, oh, okay, I guess it's December. Like it's like nothing. It's like water off your back.
Mm-hmm.
And that's very powerful. So with that being said, guys, thank you so much for joining. I'm Classic. I appreciate you so much for doing this, bro. And sorry it took so long to get back to a point, where we can even go over this. But the time, man, this is fucking amazing.
We got it set out there, and then maybe we could revisit the game in 90 days or something.
Yeah, for sure. Yeah, definitely. I definitely would not mind that at all. And our brother Don Calypso said he's going to get this put in MP4 format and stuff like that, so we can so that it can actually be saved and chronicled. But it will be up on my channel, Alvin. If you want to put it on your channel, I can show you the way to get it so that we can you can start a channel as well. Or actually, we can actually go to your channel and then you have content on it, which I don't think you have much. Do you have anything?
Yeah, man. I just like to peek in here and there.
Okay. All right. Well, we'll keep you. Listen, man. Listen. If I have the exclusive, I'll take it. All right. You can only talk to I Am Classic on Young Grizzly's YouTube channel. Exclusive. All right, guys. Thank you so much. I appreciate you all. Talk to you later.
All right. Peace.